So how do you fix what's not working? All right, how do you fix what you don't know to fix? I mean, this is really frustrating. I mean, this is why someone goes to a car mechanic. But imagine if you went to the car mechanic and you kept thinking your car was going to get fixed, but it didn't. And then you'd go to another car mechanic and the same thing would happen. But you didn't really know what it was that needed to be fixed. You just knew that what was broken on your car wasn't fixed, either because of how it sounded or the clink or the clank, but you're like, it's still not fixed. Like how do you figure out what to fix if you don't know what's broken? Right? This is the question with investing, right? Because you originally went to the big box advisors, whatever you want to call them. I call them big box. I have a client who doesn't like the phrase or the term big box, so he calls it bricks and mortar because that sounds nicer. But you went to the big box advisor to make sure your money grew, but it didn't, or things didn't go well, or when the 2008 financial crisis came in, your money fell only 40%, and yet you were sold this idea that you were in a balanced, safe, age-based approach, and yet a drop of 40% in 2008 does not sound balanced or safe or age-based. And so you knew something was broken, right? But how do you figure out what it is, right? And then the place people almost always go after the big box advisors is they end up in the $1 billion pick of the month newsletter world. And there they rail against the big box advisors, but nothing changes. In fact, it probably gets worse because they literally flood you with dozens or hundreds or thousands or literally tens of thousands of ticker symbols in a month. And things don't change, right? I mean, how do you figure it out? How do you figure out what really works? Because you want to figure out what's broken so you can fix it. Well, I want to show one thing to you today, one thing that helps people get the clarity. Because what I notice the most is what people really want. What people really want is steadiness, is stability, is consistency, not being at the whims of the market, not being at the end of some sort of manipulation, but to have the perspective to know what part of their approach needs to be fixed, what part of it is broken so they can fix it, right? That's really what people are after is I want to know what's not working. What part of it is not working? So with that, I want to show you one thing that can help figure out what can get you on to what's working. Hey everybody, this is RC Peck, and this is my weekend podcast. Good to have you here. It's episode 384. And the thing I want to talk about today is when the entire market is on one side of a trade, it tells you a lot about the probability of where that trade may go. I love this picture. It reminds me of when I used to live in India. I lived in India in my 20s when I sold software in Asia. And what I love the best about this is not that there's all these people on this, but that there's this one guy here with a gun. I'm not sure what he's doing. He's clearly not stopping people from getting on the train. But out of all that, I love that this guy's here. And some of my best memories of India are when the security guards, like they didn't even have the, what do you call it? The strength, the know-how, the ability, the responsibility to even do anything. They were kind of window dressing at best. So I want to talk about 3 incredibly crowded trades and talk about what it possibly means. So on the screen here is a price chart of copper, and this is a 10-year price chart. Now, I want to tell you that the most crowded trade in history on copper, and when I say history, I mean recorded records of people tracking, future positions. So when people go long futures, and when I talk people, I'm talking professionals. I'm talking the major houses, right? They're going long copper. That means they're buying contracts because they expect copper prices to go longer, to go higher. Long means higher. And if you look at the screen here, you'd say, well, where is the position where it's the most long positions or it's the most bullish the market's ever been on copper ever? And the answer is right here at the very end here where copper moved up, and it's right there. Commitment of traders, or the hedgers, people who trade millions of dollars, tens of millions of dollars a day, they've never been as bullish as they are right here at the very tip here. Now, you could say, well, RC, they're the professionals, and if they've never been bullish, then that's telling us something. Now, the problem with that, and guys, there's no guarantee, but the problem with that is if there's no one left to buy, and I'm not saying there's no one, but if the majority of the money is already long, there's few people left to buy. Now, the reason they're bullish is because I'm going with an assumption here. They think the price is going to go higher, and if the price goes higher, that means inflation is going to go higher. But what can often happen is when the most crowded long positions happen, it's typically it can often be a turning point of that specific market to move lower. But right now we have the longest bull position ever in copper. Now hold that for a moment. Then we have oil. The biggest long position in oil ever, right? The planet is 5.5 billion years old. Let's say oil's been being traded for 100 years. This is the longest position ever. The most bullish people have ever been in oil ever is, drum roll, not here, not here, not here, but right here. The biggest long position ever is where oil is today. Now, I will tell you the previous record for the biggest longest position ever was right here in the middle of 2014 when oil was sitting at about $107 a barrel. $107 a barrel. Prior to today, that was the biggest, most crowded long position ever. And then over the next 2 years, oil went from $107 down to $26 and change. And guess what happened down here? The most crowded short position in history. Short is when the market or when those people expect the price to go lower. So the biggest short position in history was when oil was below $27. The biggest long position in history ever was when oil was at $107, except for today, oil is at about $54 right here. And this is a big chart. This is 10 years. And so we have the largest oil position ever is today. Now, if oil goes higher, that's inflationary. If copper goes higher, that's inflationary. So we have two historic long positions expecting inflation to go higher. The third price chart I want to show you is a price chart of the 10-year Treasury. So this price chart is showing you the price of the 10-year Treasury, not the yield, but the price. The biggest short position in history on the 10-year Treasury is today. There has not been a time in history where there's been a bigger short position on the 10-year Treasury. So what you have is the biggest long position in history on copper and oil, and the biggest short position in history for the 10-year Treasury. This is very interesting, guys, because there's not a lot of gray area here. These hedgers, and these are professional hedgers, these are not mom and pops with their $10,000 account. These are people who are managing hundreds of millions, billions, tens of billions of dollars. So it's not trivial. So you have three positions all with the same bet that inflation is going higher. Okay, this is super interesting. I don't know, guys. I mean, I think over time, inflation will go higher, of course, because we've been in a 36-year bull market where inflation has been coming down. Right? We started in 1980. Here we are today, 37 years later. Bond prices have been going higher over that 37 years. Bond yields have been falling. And we do know from looking at 100 plus, I know from looking at 100 plus years of bond prices that bond, bull, and bear markets move in these really long 30-ish, plus or minus year-long moves. 30-ish, 35 years, 40 years up, 30, 40 years down. So we're nearing one of those inflection points where we could actually see, or we could see the price start to move up for the next 30 or so years. So I'm not saying that you have to go against the crowd and you have to be contrarian, but In studying price charts for 2 decades, I've noticed when a trade is incredibly crowded, it's typically not the time that shows the turning point. So I'm watching this to see, hey, is this going to move higher? And it does. If bond prices move higher, all those people short, and it's a significant amount of future contracts, about 600,000 future contracts, they will have to buy back their future contracts, which will push the price higher. And just the opposite is the case for oil and copper. They are long oil and copper, largest position ever. So if they want to unwind it, they'll have to sell their position, right? They'll have to take the opposite side. And so knowing, and it's not something I share that often. I'm not hiding it, but it's not something I share that often. But knowing where these kind of lifetime crowded positions are can often give you a clue on what to pay attention to. And that's one of the things that does not work for people. They don't know what to pay attention to. There's so many things to pay attention to. And I'm not saying, oh, okay, add this to your list, your litany of whatever it needs to pay attention to. I'm simply saying there's only a few data points that you really have to pay attention to in order for you to figure out what's best for your money. And this is one of those simple ones, because in any one year, there aren't many lifetime, major positions of lifetime longs or lifetime shorts. So what's the takeaway? First of all, when there's no more people, okay, when there's no more buyers, it's going to be harder for that thing to move higher. And when there's no more sellers, it's going to be hard for that thing to move lower. Whatever that thing is, gold, bonds, stocks, oil, copper. And so what often happens is the largest long positions, the most bullish positions, you'll find at inflection points. And the biggest bearish positions you often find at inflection points. And groupthink is a real thing. And so knowing what some of those are can help you understand what you need to do to figure it out, right? Because you want to know what is it? What is the thing that's not working? What is not working? And that's one of the key things people want to know. I want to know what part of my approach is not working so I can fix it, so I can finally know what really works, so I can have stability back, so I can have steadiness back, so I can have, be able to have some leniency in my life, some fluctuation, some space, so I know I will have enough, so I'm not at the whim of the markets. I just want to know. I just want to know what needs to be fixed, right? I just want to know that. I want to figure out, how do you figure that out? I want to figure that out. And this is one piece that can help. Hey guys, this is just another step in helping you protect your future and your portfolio. Until next time, this is RC Peck.